Good afternoon, everyone. My name is Steve West. I'm the CFO of African Petroleum. It's my pleasure to be online today, giving you a presentation on the company. It's quite an exciting juncture for us as a company. So I'm really in town doing a few meetings, just trying to spread our story and highlight the good things that are happening with our company. So if I dive straight into our presentation, which I believe is on your screen, and we'll flick over to the disclaimer. I won't obviously read through the disclaimer, but it is there. Moving on to the company highlights. So as our name suggests, we're an oil and gas company. We're focused on Africa, and specifically we're focused on West Africa. We've got 10 licenses in 5 countries. We've got a very large unrisked prospective oil resource number, which has been independently verified. So it's not just our number, it's independent. And that's over 12.5 billion barrels. We've got very strong relationships with host governments. And we think the acreage position that we hold is world class. And we're currently going through a process to bring partners into that world class acreage, which I'll touch upon a bit later on in the presentation. And what's been great for us as a company is the number and the size of significant discoveries nearby to our acreage in the last 12 months. So there's been large discoveries in all of Côte d'Ivoire by Total, Can Energy and ConocoPhillips in Senegal, and Cosmos in Mauritania and also in Senegal now as well. So we've had the benefit of companies investing large sums of money around our acreage and de-risking our acreage for us. So we're very happy with that. Now in terms of us as a company, we do have an early mover advantage. We did go into these 5 countries we're in early on in the process, and because we were in there before other companies, we managed to negotiate very good fiscal terms with the governments. And what that translates to, as you'll see later on, is very low break-even oil prices in terms of development for deep offshore oil development. Now, we are in West Africa, as I said. We are offshore. Everything's offshore. But it is a benign operating environment. So we don't have hurricanes or pirates or anything like that to deal with. So we're very happy with the environment we're in terms of operating as well. We do have expertise, so we have operated in all our licenses. We've acquired seismic over all 10 of our licenses. We've drilled 3 wells in our Liberian acreage. We've invested, this is important, we've invested over $400 million in these licenses in order to get them to a position which they are all now drill ready. And they're all available for partners to come in and help us start drilling again. So in terms of the drilling program, we haven't drilled for a couple of years now, and the last year and certainly the first half of this year is all about getting us into a position where we can start drilling again. And you're going to hear me talking about bringing partners into our acreage a lot during this presentation, and that is really where we're at in our business plan. We're trying to bring partners in, industry partners in, that can pay us money to get a chunk of our licenses and then also contribute towards the drilling of wells going forward. So that really is our focus at the moment. And importantly, we've actually delivered on that recently with Ophir Energy, and I'll talk about that in more detail in a minute. So we are listed in Oslo. We're on the Oslo Access Stock Exchange. We were previously also listed in Australia, but we voluntarily delisted from that exchange, the NSX, last year. We have just over 100 million shares on issue. Our current market cap is around about 150 or 160 million NOK. I think it's gone up slightly today. As I go through this presentation, the message for me is that I think there's a lot of value to come from us in terms of share price going forward. We have a very strong shareholder base. So institutionally, we have M&G Capital Group, Artemis Henderson's. We also have BlackRock, Goldman's. We have a very strong institutional shareholder base. But to complement that, we also have a very strong retail following. So we're very happy with the retail following that we have here in Norway. We also have been doing roadshows on the continent in Germany and Switzerland as well, just trying to get some retail interest over there. So we see that as a key part of our business is having retail investors. So we flick over to the next slide. So 2016, the start of 2016 has been a bit of a train wreck for lots of companies in our space. We think we have adapted in a very, very good manner at the end of last year in order to prepare ourselves for 2016, and we've entered 2016 in a very strong position. And the key reason we've managed to do that is the deal that we did with Ophir Energy in late December. So the deal we did there was on one of the licenses in Ivory Coast. It's a CI 513 license. The deal was with Ophir Energy, a London listed company with hundreds of millions of dollars in the bank and a very good reputation of exploring for oil and gas in Africa. So we're very happy to have them as a partner. They will be operating the license going forward, and we're currently in discussions with them at the moment on going forward on that license and working out drilling plans and things like that. As part of the deal, we will be getting $16.9 million in cash paid to us. And the only thing outstanding at the moment is we're waiting on a third and final signature on the license from the government in Ivory Coast, which we believe is forthcoming any day. So we're just waiting on that before we can close out that deal. Now, in addition, in preparation for 2016, we did streamline the board. We did have a very large board, which we've now streamlined down to 5 non-execs from 8, and that will be streamlined further as we work our way through this year. We have had a new CEO join, Jens Pace. Was for rather unfortunate reasons, as the previous CEO, Stuart Lake, left for health reasons. However, the transition was fine, as the CEO, Jens Pace, used to be the COO. So, and he's been with the company since 2012. So a fairly seamless transition. And I've also been appointed to the board as an executive director as well. We've also reduced our overhead. So we've got cash coming in. We've reduced our board, and we've also reduced our overhead significantly. So in terms of the burn rate's come right down. It's probably at about 40% of what it was at the start of last year. We've managed to do that by significantly reducing headcount. So the London headcount's reduced from 17 to 6 people, and we have only retained senior staff, and all the senior staff, including myself, have taken an average of around about 40% pay cut. However, we very much believe in what we're doing here with the company, and we're prepared to take that salary cut, as we see it, as a short-term measure to enable us to do further deals. And as I said, we've also voluntarily delisted from the NSX in Australia, which has further reduced the cost base. So just to really push that point, we are very well placed for 2016. So moving on to the board and management team, as I said, we only retain senior staff, so the board and management team is actually still very strong, even though we've gone through a large headcount reduction exercise. Jens Pace is now the CEO. He's of BP heritage. He's done a lot of work in Africa in the past, and he's been instrumental in the farm-out process, including closing the deal out with Ophir Energy. I've been working with him very, very closely on that. Myself, I have a bit of a strange accent because I'm originally from Australia. However, I've been in London for about 18 years now, and I've been with the company since October 2013. And since I've joined, we've managed to get the company listed on a proper exchange, Oslo Access. We've recapitalised the company in terms of doing some fundraisers. We've cut our cost base right down. And the final piece of the puzzle for me is to complete some further farm-out deals, which we're working on at the moment. Michael Barrett, who's our exploration director, he's quite key in the farm-out process as well. He's got big company heritage with Chevron, but also more entrepreneurial heritage with Adex International, who of course had acreage positions in Africa. So he's key to the team, and we also have internal general counsel. And we obviously also have a chairman, and the chairman has other chairmanship roles and has been doing chairmanship roles with listed companies for a number of years. So that is the key team there. In terms of the exploration acreage that we do hold, it's illustrated on slide 6. And what this is illustrating is the positions in all 5 countries, so Senegal, Gambia, Sierra Leone, Liberia and Cote d'Ivoire, and also the split of the 12.5 independently verified billion barrels of prospective resources between the countries as well. And as you can see, it's very much focused on West Africa. The other highlight here really is the other industry players in the region. So the most relevant at the moment in terms of activity are Can and ConocoPhillips, who are drilling in Senegal right now, and you've got Cosmos drilling in Senegal and Mauritania right now as well. And Total also had a discovery down Ivory Coast right next to our acreage as well, which was late 2014. So we certainly think we're in the right address in terms of building up a large reserve base in West Africa. Now, in terms of third-party activity, we've been very lucky in terms of third-party activity in the last 12, 18 months. So if we look at the Cosmos Energy activity first, so in April 2015, they had a discovery in Mauritania in the Tortue-1 well, which was a large play-opening gas discovery according to them. They had another discovery with the Masuin-1 well, which was the follow-up well. And then they've also had another discovery recently in Senegal as well. So they're really opening up a gas presence in northern Senegal, southern Mauritania. And you look at the speed of how fast they've actually done this, it's quite impressive. And then moving down south a bit further to the Can Energy activity in Senegal. This is more relevant to us from a geological point of view. We see the same geology coming into our block in the north and our blocks in the south. They've had 2 play-opening discoveries, the FAN-1 discovery and the SNE-1 discovery, which were made in late 2014. They then commenced an appraisal drilling program to follow this up in Q4 last year, and they announced another discovery, the first well in that appraisal campaign, in January 2016. So far they've had 3 out of 3 discoveries, and you'll see later on in the presentation that we surround these discoveries with the same geology. So we're very excited with that area. Moving a bit further around to Liberia, Cosmos Energy, we understand, is in the process of signing up some new licenses down in Liberia. And then, of course, Sophia Energy have entered into Cote d'Ivoire by coming into our license, the CI513 license. And then also Total I've spoken about, they had a discovery in late 2014, the Saphir 1XB discovery right next to our CI513 license in Cote d'Ivoire. So moving along to our milestones that we achieved last year. So this slide and the next slide is really just trying to make ourselves accountable to our shareholders by ticking off what we've achieved in the last 12 months and also setting out our objectives for this current year, 2016. Now, the biggest milestone that we achieved last year was closing the deal with Ophir Energy in Cote d'Ivoire. It has strengthened our financial position, but it's also demonstrated and proven to the market that we can do deals with well-known companies, well-respected companies in this current oil environment. We also did a couple of private placements last year. We upgraded our prospective resources. We have gone through significant cost-cutting measures, which I've already spoken about. We had a board restructuring. We delisted from the NSX, and we are continuing to see lots of activity in our farm-out data room, particularly in Senegal and in Gambia as well. So moving over to 2016, our focus really is, as I said at the start of the talk, is to complete further farm-out transactions during the first half of this year. Now, the reason we're doing that is to, the reason we're doing that is to fund our forward well drilling program. And we're going to do that through bringing partners in. We have no intention of going to the market and raising money to drill wells. Our business model is to bring partners in to do that. And by doing that, we're going to strengthen our financial position, and we're also going to make sure that we maintain our cost and capital discipline that we've implemented. We need to keep our costs down. We're very much aware of that. And we're going to continue working out the licenses. We are an exploration company, so we didn't need to continue doing technical work in our licenses. We're going to monitor our portfolio. We have lots of licenses, 10 licenses in 5 countries. So we're going to manage that portfolio. We may acquire more acreage, or we may reduce our acreage. We will manage that as we go through the year. We will also look at other opportunities throughout the year, and there may be a structural change in terms of the group structure as well. So moving on to the current market, obviously there's a lot of coverage in the press on the current market at the moment, and the oil price volatility and certainly the low oil price environment. Now there is a silver lining to that cloud, and that silver lining is the costs associated with exploration have reduced significantly. So we see drill ships, for instance, which were around about $700,000 a day probably 18 months ago. We can see the same drill ships for about $260,000 a day. So in terms of a well cost, we can see deep offshore wells being drilled for around $35 million a well, whereas in the past they were around $80 million a well. So that's a significant saving. Now, in terms of us specifically, as a candidate to invest in, we think the acreage that we have and the fact that it's surrounded by 4 significant oil discoveries and 2 significant play-opening TCF gas discoveries puts us in good stead as a company to invest in for the future. I think certainly if people see the oil price increasing in the next 2 to 3 years, I personally think we're a good candidate to invest in. We have large prospective resources independently verified over our acreage as well, and we've demonstrated to the market we can do deals. We've demonstrated our business model works. So moving on to the economic summary, I touched upon break-even price previously. You can see a very low, for a deep water development, very low break-even oil prices here. The only one over 50 is Sierra Leone, and that's over 50 because it's ultra deep water. We're talking 3,500 meters of water there, whereas the other ones are in more shallow water. Ivory Coast is probably closer to $40 a barrel now that we've got a new license agreement out there, rather than 45. Now, importantly, these costs are all based on old cost data compiled by Wood Mackenzie. So these aren't taking into account the current low cost environment. However, we're also assuming a higher oil price, so I think it's a fair representation of break-even oil price. Now, the next slide, on page 12, is quite a dramatic slide. However, if I talk through what we're trying to demonstrate here, it is a reasonable slide in my view. So starting position of around $17 million in US dollars terms in terms of market cap. Now, if we have a discovery on one of our licenses, let's pick Gambia, for instance, and it's 250 million barrels, and we have a 45% interest in that license, and the oil price goes up to $70 a barrel in 2 or 3 years' time, then you're looking at an NPV on that of $700 million. So that's what that bubble represents there. Now, if you want to sense check it, you can look at a share called FAR, F-A-R, which is listed on the ASX in Australia. That has a 15% interest in a 330 million barrel discovery in Senegal. This is the discovery made by Can Energy, which I was talking about earlier. So they have a 15% interest in that, and their market cap is $300 million. So it kind of makes sense if you look at it, if you use that as a comparison. Now, I understand where we are today, and post-discovery, there's quite a journey that needs to be done there. So in order to get from where we are today to discovery, we do need to do further deals, and then we need to drill as well. But then once we start drilling, I'm confident we will have discoveries. We have lots of prospects, and we're surrounded by discoveries, which has de-risked our portfolio. Now, the next slide sets out our prospective oil resources. You can see the growth from 2.4 billion barrels, which was material in its own right, to 12.5 billion barrels today. Now, importantly, it's split over 5 countries now rather than 1 country back in 2011, but a very material number there, certainly larger than what a company with our market cap would usually have. Now, if you look at the next slide, that 12.5 billion barrels, importantly, is very largely diversified as well in terms of the size of the prospects. So you look at that graph with the bubbles, Each one of those bubbles represents a prospect size. So the size of the prospect, the risking of the prospect, it also shows the depth of the prospect in terms of the age of the rock. And you can see it's very, very, very diverse. So when we drill, we're not going after one of those bubbles, we'll be going after 2, 3 or 4 of those bubbles. So it's a less risky proposition when we do start drilling. The two illustrations on the right are illustrating basically the play concepts that we're chasing in our acreage. So from Côte d'Ivoire to Sierra Leone, so Côte d'Ivoire, Liberia and Sierra Leone, it's a very traditional oil play scenario where the sands are getting larger and deeper and more in number the deeper in the water that you go. And it also shows the evolution of drilling as well. So if you look on the far right-hand side, the blue drill rig, the 1970s to 2007, that was the first wave of drilling where people didn't have a lot of luck because they were too far up in the shallow water. They then stepped out, I think, as the technology caught up, and they did have oil shows, so it was a bit intriguing, but nothing commercial. And then 2014 onwards, they've stepped right out into the 2,000 metre water range, and they're having commercial discoveries. So this is an exciting time for the industry. Now, slightly different, or very different actually, geologically in Senegal, Gambia, the play concept there is all around carbonates. So on the left, and these are two proven play concepts by Can Energy. So on the left-hand side, you can see the sands banking up against the carbonates, and this is in around about 2,000 metres of water. And on the right-hand side, you've got sands accumulating on top of the carbonates, and that's in about 1,400 metres of water. Both of those concepts have been proven by Can Energy. So we focused in on Côte d'Ivoire. So we've got two licenses there, the 509 and the 513. Ophir Energy, as I said earlier, has come in as a partner on the 513 license, taking a 45% interest in that license and also taking on operatorship. But if you look at the illustration in the right-hand corner, you can see the proximity of the Total Saphir-1 oil discovery to our license. So the Saphir well oil discovery is shown by a green blob there. And we see the same geology coming into our license in 513 and 509 as well. And this is probably the reason why Ophir came in. They could see the same play concept coming across as well. So we have done a data swap with Total. So we have a copy of their seismic, they have a copy of our seismic. So we're able to map this discovery very well with our acreage. Moving on to Gambia Senegal, this is probably the most exciting part of our portfolio. It's certainly the portfolio where we're getting the most interest in the farm out data room at the moment. And it is a very busy illustration on the right hand side there, but it's hard to make it less busy because there is a lot going on here. So if we look at the green area, which is where Can Energy has had 3 oil discoveries, one as recent as last month. We have a 90% interest in the ROP blocks to the north. We have 100% interest in the A1, A4 to the south, and 90% interest in the SOSP block further south. And you can just see we're littered with prospects on all these licenses, particularly in Gambia. I mean, Gambia is covered by prospects, all significantly sized prospects as well that have been de-risked by drilling around us. So we're very, very excited by having this acreage here, and we're very confident we're going to find partners for this acreage. The next slide focuses in on Gambia. As I said, this is probably the most exciting licenses we have. It doesn't really add much to the other slide that I just showed you, so I won't dwell on this, but it just has a few more illustrations on there. Liberia, these are the 2 licenses that the company was listed on in 2010. So there's been seismic shot over both these licenses. We've drilled 3 wells on the LB09 license. The last one was drilled in February 2012. And there has been a discovery as well on the license, the Narina 1 discovery. So there hasn't been a lot of activity since the discovery. That's mainly been driven by 2 factors. One is we don't have any drill commitments on these licenses, having drilled 3 wells already. And the second reason is we are, as I've said a number of times, looking for partners, and for whatever reason we haven't had a lot of partner interest in these licenses yet. So we've been very much focused on licenses where we're getting the partner interest. But these are licenses which should not be dismissed. These hold significant value, we think, and we'll be doing further work on these later on this year, I'd imagine. Sierra Leone, this really is for later. So it's kind of blue sky for us. The reason I say that is the prospects that we have, and these are prospects mapped on 3D seismic that we acquired in 2014, so very recent seismic, are very material. For instance, the Vega prospect, we think 2 to 3 billion barrels of oil in place. However, it's in about 3,500 meters of water. My understanding is the deepest water that's been drilled through to date is about 3,127 meters of water in India. So we don't want to be, certainly don't want to be the pioneer in drilling those depths of water. So we're really just sitting on this acreage until the technology catches up. But we are very excited for this. In terms of recommencing drilling, so slide 20 is really just a complicated way of illustrating that we are currently going through a partnering process. We're going through that partnering process in order to get financed, and we want to be financed so we can start drilling again. Once we start drilling, which could be as early as later on this year, we'll be looking at drilling 2 wells a year. And we certainly have the portfolio to do that. We have at least 20 or 30 drill prospects to chase after. So there's no shortage of prospects to drill, that's for sure. So in conclusion, we do like to highlight 4 main areas that we think are strengths for us as a company. We have a very diverse portfolio. So we are in 5 countries, split over 10 licenses. We have a high equity position in all those licenses. We even retain 45% in the license we just farmed out to Ophir Energy. It's a very large prospective resource number, independently verified for those licenses, so 12.5 billion barrels. It's a large number in anyone's books, and we've had lots of luck in terms of other companies investing significant amounts of money, drilling wells and having discoveries around us and de-risking our portfolio for us. So we're very, very lucky in that sense in terms of specifically in Ivory Coast with Total, Senegal with Can and Cosmos, and Mauritania by Cosmos as well. And they're all, both Cosmos and Can Energy are both drilling right now. So there's active drilling campaigns happening right now. In terms of capabilities, we have a highly experienced management team. We've managed to retain that management team despite going through a very large headcount reduction. Importantly, it's a management team which has delivered on everything we have gone through here in this presentation. There's nothing in here that we haven't delivered on so far. So we're confident we can reciprocate that and continue to deliver on that. We have very strong relationships with host governments, which we've demonstrated a number of times through the years. And we have a proven ability of attracting credible industry partners, which we will do further on this year with other partners as well. In terms of investment proposition, we have a blue chip investor base in terms of institutions. I've run through the institutions early on in the presentation, but to name some of them again, so M&G are very supportive, and Capital Group, Henderson's, Artemis, all very strong blue chip institutions. We're well positioned for this low price environment now, having cut all the costs and having an injection of cash from the Ophir deal. We've got absolutely no debt at all. We think we have significant growth potential by bringing partners in and demonstrating to the market that we can do that. And we have lots of very strong conversations going on with potential partners at the moment, which we hope to translate into deals and announce to the market in due course. So that is the presentation. And just set out there is just some of our advisors and contact details. I'll pass it over for questions.
Perfect. Thanks a lot. Folkens, da vil jeg bare oppfordre alle sammen til å skrive inn spørsmål, og takk til dere som allerede har begynt å skrive inn spørsmål. I think we can start with question 1, Stephen.
Sure, okay.
So the question is, when are you expecting to receive the 16.9 US million from Ophir Energy?
Yep, good question and very topical, one that we do get asked quite a lot at the moment. We've, as I said earlier, we're still waiting on the final government signature. down in Ivory Coast. Now, keeping in perspective that we spent months renegotiating this license with the government, so we have the buy-in of the government. So I don't think there is any risk in my mind that we won't get the signature. But we see the signature coming imminently. It's hard to put a time frame around that, but I'd certainly say we'll be getting it this quarter. And the sooner the better. But as soon as we get that signature in, we will be getting the funds in within days from Ophir Energy.
I will just read through all the questions coming in. So good day. In light of the company's current cash balance and your newly informed agreement with Ophir Energy, I believe most investors are curious as to when the settlement of the agreed $60.9 million will take place. How long will you expect the ministry to sit on their hands until they decide to prove their final signature? Or are there processes within the ministry we do not know about? Thank you and the best of luck.
Thank you. Okay, thank you. So yeah, again, a question about the 16.9. So I think I've answered the timing. It's kind of unknown, but it is imminent. They're certainly not sitting on their hands. We're in dialogue with them. It is West Africa, so things do take a bit longer there. But we have a track record of getting things done with the host governments that we operate in very quickly. So we have no reason to believe that it's not forthcoming imminently. And we're in dialogue with them. There's no problems that we're aware of, and there's certainly no problems with the deal with Ophir because of this.
So question 3, how long will your current cash level last without payment from Ophir?
Well, so it was hard to give you a number without making everyone insiders here, but I can say that we've reduced our costs significantly, and we've done that to make sure that we don't have to come back to the market and raise any more money. We've been doing business in West Africa for a very long time, so we've planned for delays in the signature. So hopefully that answers your question in a roundabout way.
And regarding the finances, question 4, are your financial situations stable at the moment?
Yep, so unfortunately I need to give a similar answer. So we have entered 2016 in a strong position. So yes, we are still waiting for that $16.9 million. Yes, we have planned for that to come in probably in the next month or so. We have cut our costs back significantly, as I said a few times. So we think we're in a good position. And the reason I'm in town and the reason I'm doing this webcast and going around seeing other brokers is just to get the story out there, because I don't think there's many other companies in our space that are in as good position as what we are. So really it's just getting the story out there.
Jeg er jo bare oppmerksom på at det ikke like lett for Stephen å svare på forward-looking questions, så det kan dere jo tenke på når dere skriver inn. Vi fortsetter, folkens, med spørsmål 5 blir det vel. It's a customer that joined in a bit late, but his question is, could you please indicate break-even oil prices for the most promising prospects?
Sure, yeah. So we did cover that in the presentation, but I'm happy to go over it again. So
you can switch back.
Okay, there we go. Thank you. So yeah, slide 11 sets out our break-even prices. Now it's important to note, and this is very important, that these are based on cost benchmarks from Wood Mackenzie back when the oil price was $100 a barrel. So we haven't taken into account the current massive reduction in costs. So that aside, we still have very low deep water break-even oil prices here. Sierra Leone is slightly higher, it's 51 because of the deep water, ultra deep water of 3,500 meters we're operating in. Cote d'Ivoire is actually probably closer to $40 now after we've got this new license agreed with the government out there. But keeping in mind, we're looking at developments in 2-3 years time. We're very confident that oil price will be a lot higher than these numbers in 2 or 3 years time.
Do you have any indication of the gas oil mix in these discoveries?
So we're confident we're oil. So we're confident it's all liquids that we're drilling. Now, the reason I can say that almost in the same breath as talking about Cosmos having large gas discoveries in Senegal is that the geology that Cosmos is drilling into in the north is very different to the geology we're drilling into in the south of Senegal. And that's been proven by Can Energy's oil discoveries as well. So we're extremely confident that we're chasing oil in all our prospects.
Vi fortsetter videre, folkens. Skal vi se. Have you put a deadline as to the ongoing negotiations for farm outs of Senegal and Gambia? How far are you with closing deals here?
Okay, so there's no formal deadline. We are in discussions with a number of companies. We have had an increased interest, interestingly, this year off the back of these discoveries by Can and Conoco. So there's a large audience we're speaking to, and to be honest, we will be driven. The timing will be driven by the first decent offer we get across our table from one of these companies. That will really drive the timing. But we certainly want to be doing at least 1, 2 or 3 even deals the first half of this year.
We received a long question. Maybe you just want to read it?
Yeah. Sorry, just bear with me. Just got a very long question. I'm just reading. Okay, so I've got another question about the signature. I think I've covered that, but just to reiterate, we are waiting on the third signature. We think it's imminent. We have no reason to believe it's not. We are in good dialogue with the government, so we are kept up to date. But certainly that should be forthcoming very soon. There is no long stop date on approving that receiving that last approval in terms of the agreement with Ophir. So that agreement with Ophir is still very strong, and we are in constant dialogue with Ophir. We're treating each other as partners already. Sorry, just reading the rest of the question. In terms of it's asking, I've got a question about the funds coming in from Ophir and what are those funds going to be used for. Unfortunately, I can't give too much detail away there because we haven't published that, but suffice to say, after we receive the funds from Ophir, we have no intention of going back to the market to raise funds. So hopefully that answers that question. Sorry,
just jump to this one maybe.
Okay, I've got another question. Is there a long stop date on securing the last approval? No, there's not. No.
Just scroll further down.
And sorry, just to elaborate on the long stop date. So to be clear, we've signed a brand new agreement with Ophir, license agreement with Ophir and the government. So typically in a farm out agreement you would have a long stop date, but because we've signed a brand new license agreement with the government, there is no long stop date in there. Okay, so there's a question about the percentages of interest once we do get this third signature in Ivory Coast. So African Petroleum will have 45%, Ophir Energy will have 45%, so that's 90%, and the balancing 10% will be held by Petrosi, and that is a covered interest, yes. So both ourselves and Ophir equally cover Petrosi's 10%. Okay, so I think the next question is talking about, do I believe the cash settlement will be a substantially larger amount than the one seen for Ophir Energy? I think that's referring to the next deals that we do in Gambia Senegal. It's very hard to answer that question without giving too much away, but what I will say is the license in Ivory Coast, the only party we were talking to was Ophir. Whereas, excuse me, whereas the licenses in Gambia Senegal, we're talking to lots of companies. So by that alone, it puts us in a better bargaining position.
Just scroll a bit down, maybe. Vi har mange spørsmål her, folkens, så vi fortsetter en liten stund til. We'll just try to solve as much questions we can. So I think it's maybe the best if you just read them, actually. There's a lot of them going on.
Yeah. What's the ratio of non-interested parties versus interested parties after visiting your data room? Well, I can't really give that information away, but what I can say is the interest level has been very strong and surprisingly strong in such an oil environment that we're in. And the mix of companies we're speaking to is very strong as well. There's some very large companies we're speaking to. Can you indicate when an Ophir is likely to commence the first well, provided the approval is granted? So I can't is the short answer, but we are in discussions with them already. It's going to be, my guess is going to be sometime in 2017. But we really need to firm that date up with Ophir, and it's not really our position as a non-operator to tell the market that date. Are there currently any other active potential transactions, farm-outs or similar, which you assume will provide cash for the company? Short answer is yes. That is very much our focus, and we are particularly focused on Gambia Senegal. And we have outlined as an objective earlier on this presentation for 2016 that we will be doing further deals the first half of this year in Gambia Senegal. In the Q3 report, APCL reported cash of $511,000 US. Can you update on the cash balance as current as possible? So I can't tell you the cash balance as it's market sensitive. It hasn't been published. However, I can give you some key numbers and you can maybe put the jigsaw together. So you're right, the last published number was $500,000 back in the end of September. Then since then we've also done a $2 million fundraising in October last year. And then also on top of that we have obviously got this Ophir money coming in of $16.9 million as well. So I can't give you, unfortunately, a specific cash number, but what I can say again is there's no intention at this stage to go back to the market and raise any money. The current cash burn at the moment, again, I'm not sure we've actually published that number, so I can say it's significantly reduced. We're probably running at about 40% of what we were a year ago. So yeah, it's a lot lower than what it has been in the past. What do I think of our current market value? I like that question. That's my favorite question so far. I think this is my personal opinion, I think we're very much undervalued. I've invested my own money in this company. I put $120,000 into this company in February last year at a price, I think the price at that time was 4 NOK, so a lot higher than what it is at the moment. I'm certainly not interested in selling those shares. I mean, I think I'm going to make money in those shares. And in addition to that, I've taken a significant pay cut. And the reason I've done that is I can see some value being created here. It's my job and the CEO's job and the rest of our team to create that value. And you know, one part of that job is getting out there and just telling the story, which is what I'm doing today. Sorry, just reading.
Let's go back up.
Okay, so I've got a very accounting question here, which is good. I like accounting questions. On your Q3 balance sheet, you carry $410 million US in exploration and evaluation expenditure. Should this not, according to IFRS 6, exploration for the evaluation of mineral resources be expensed and therefore written off? Well, yes and no. There's two ways of accounting for it. One is the successful efforts method, which is probably the more recognised method, to be honest, in the market. Which in that case, yes, we would have written them off unless we had commercial discoveries. However, we don't currently do successful efforts method. So we do a fair value assessment each reporting period. It was determined for Q3 last year that they were carried at fair value. Sorry, I've got lots of questions here, so I'm just trying to pick out questions from people that haven't asked questions. Okay, so does the company have restricted cash, and at what point will money be released? Yes, we do. So we have restricted cash in Ivory Coast of $12 million, and that gets released on drilling. So when we drill wells, we get cash back. I've got another question here about from Dag again. Thank you, Dag. About cash situation is obviously a concern. Do you assume that the Ophir transaction alone will be sufficient to cover expenditures aside from drilling for the rest of the year, or do you seek to raise funds through other means? I reiterate again that after we get the Ophir money in and after the cost-cutting exercises we've done, which was no mean feat, we are comfortable. We have no intention of coming back to the market this year to raise money. So I have another question. So there may be a bidding round if there are several parties willing to partner up for Senegal Gambia licenses. Well, yes, there will definitely be competitive tension. That's what we want, to be able to negotiate better terms than the Ophir deal. All we need is competitive tension, and we're confident we'll have that. When you're saying visiting your data room, does that mean geologists from other parties analysing the complete seismic data? I mean, we have technical teams, so we have geophysicists, geologists, we have commercial people, we have lawyers, we have CEOs, we have new business people. We have full teams, and we don't just have C or D teams. We have a lot of A teams turning up for big companies as well. How do you think the oil price will be in 2 to 3 years? Obviously, everyone, I think if you've got a room full of 100 people and ask them, they'd all have a different answer. But my answer is I cannot see the current oil price being sustainable for the next 2 or 3 years. I really do believe it's going to be at least 60. I mean, I'm a bit of an optimist. I think probably 70 in 3 years' time. But certainly, it's going to be supply driven. The next increase in price. I mean, in terms of supply, not enough supply. So you can see already there's reductions in supply with fields getting shut in, and it's not a matter of just pressing a button and turning these fields back on again. There's a long lead time between putting fields back in production or sanctioning new developments. So I can see a big spike in the oil price in the next 2 to 3 years. Why have you not updated the break-even prices due to the current market situation? It's a good question, and it's something we did think about. However, the development scenarios we're looking at is, we're looking at development scenarios when the oil price is $70, $80 a barrel. So we thought it was a fair representation if we used higher costs. So that's why we've done that. Do you have any other means of raising money? No, and we don't believe we need any other means of raising money. We have over $400 million that we've invested in these licenses, which is a pool of money which we can recoup by bringing partners in. So, for instance, if we brought a partner in on one of our licenses for 40%, and for example, we had $30 million of back costs or previous investment on that license, then we're probably looking at getting $12 or $13 million cash injection from bringing that partner in. Plus, we'd want some coverage on a new well to be drilled on that license as well. Next question, I don't think I can answer, but I do like it, so I'll read it out. What do you think the stock price in your company is in 5 years' time? I think I would hope it's higher than what it is now. But unfortunately, I can't give you a number there.
Vi har fått veldig mye spørsmål, folkens, så vi prøver å komme oss gjennom det som har kommet. There's a lot of questions today, so I don't know if you feel if you have answered them all.
Yeah, let me just read. Yeah, I mean, there's a few questions about cash,
Funding, cash
funding,
funding.
and funding,
Yeah.
and things like that. Which I understand there's been a bit of chat going on the online forums about me coming out here to raise money. I can categorically say I'm not here to raise money. I'm just here because I think we've got a good story, and I think it's a time where I can go out and tell the story and get FaceTime with people and investors and brokers, because there's not many other companies out there that can offer what we offer. I really do believe that. Why did we enlist in Frankfurt? So that's another question. So just to be clear, it's not a formal listing it's not a formal listing process like we went through here to get listed on Oslo, which is a fully regulated market. It is just it's almost like a piggyback, if that makes sense, listing, which we didn't actually instigate. It was another broker out in Frankfurt that did it. I think it was Baader Bank that did it. And it just gives access to some of the retail investors in Germany to buy our shares. We do have some investors out in Munich and Frankfurt, and we're actually also in Switzerland as well that have been trading on that exchange. And another question, I do like this question too. Do you personally believe the company is significantly undervalued at the moment? Yes, I do. I think I've outlined the reasons why I do, but yeah, particularly I think once we announce the closing of the third signature and the money coming in from Ophir, we're pretty much at cash value. So an investor is getting 12.5 billion barrels of prospective resources surrounded by recent significant discoveries for free.
Perfect. I think we have done all of the questions now. Maybe you would like to say some few words to summarize it before we end the presentation.
Yeah, sure. So yeah, well, thank you everyone that listened, and thank you for all the questions. And I apologise that we haven't answered all the questions, but we have been a bit inundated with questions, and it is actually quite difficult to read them all and answer them at the same time. Excuse me. But in terms of summary, I think we're a good investment proposition in terms of the assets that we have, the fact that we've got discoveries all around us. We're not eroding value at the moment by producing at low oil prices, which other producing companies are. That's important. We're looking at producing in 3 years' time when the oil price, I think, will be a lot higher than what it is at the moment. We've got a very strong management team. And I think we've entered 2006 very strongly, and I think just watch us this year. I'm very confident we're going to deliver further good news to the market this year.
I think that will be the famous last words.
Thank you.
I will thank Stephen West for coming out to Nordnet office this afternoon or evening. Ja. For dere som har fulgt presentasjonen, så vil vi legge denne ut på vår Nordnet Norge YouTube-kanal og legge den tilgjengelig da for alle sammen. Jeg vil også sende presentasjonen til alle sammen som var påmeldt til dette webinaret, så da vil dere få det med dere i opptak uansett hvis det er noe dere ville høre på nytt eller som var uklart underveis. Så tusen hjertelig takk for alle spørsmål, det var overveldende mye i dag, det er godt å se. Så håper jeg alle får en fin dag videre, og så